A couple we are working with is facing a 50 to 60,000 euro penalty for investing outside of Germany. And many of you guys that send money abroad might be in the same situation. That's why I shot an interview with Tax Advisor Dirk to make sure you are compliant with German tax laws when investing abroad. Because if you're in jail, you cannot watch our videos anymore. So that would be a huge shame. Let's start with the first question from, let's call him Mike Literis, just to keep him anonymous and safe from Finanzamt. It's actually more a clarification than a question actually. There is no penalty for sending money abroad, not to India and not to any other country. There is a penalty, however, for sending money abroad, investing it, and making profits without declaring them here in Germany. Here's what Tax Advisor Dirk said to this.
As you already said, Axel, there is no penalty for sending money abroad. There might be some legal rules to adhere to, which have to do with foreign currency regulations and money laundering regulations, but that is usually handled by the banks, right? The issue might come up when you send money abroad which was not taxed, so basically black money, or you have sent the money abroad which generates income, and since you are a resident of Germany, you are obliged to declare it within your German tax return, and you do not do that. So then you have a topic, and we will come to it a little bit later, what that means and what to do about it.
The entire interview with Dirk, which is more than 30 minutes of jam-packed expert knowledge of international taxation, is online for our YouTube channel members. Now, you can just click the join button right below the video, and then you will have access to exclusive videos, members only live streams, and much, much more. The next question comes from a viewer here on YouTube that openly admits to committing tax fraud, which is a crime that is punishable by up to 10 years in prison, by the way. So let's anonymize him too and call him Ben Dover, because he has to bend over once Finanzamt catches him. Get it? He asks how much evaded taxes we are talking about when our clients have to pay 50 to 60,000 euros now. How much is that compared to the profits they were making outside of Germany? Let Dirk answer this.
If you have money invested abroad and it generates income, it's taxable in Germany. If you do not declare your income in Germany, that's tax evasion or tax fraud, depending on the circumstances at the end of the day. Or if there is tax fraud, tax evasion, then criminal investigations will start when the tax authorities do realize that. The amount of the penalty then applicable basically depends on a lot of circumstances. One is, of course, what is the amount of taxes not paid? Up to 50,000 euros taxes not paid, they might issue that you have to pay some money. There is not a fixed rule how much has to be paid then, right? But they give you some conditions, and then they do not pursue the criminal investigation. From 50,000 euros up to 1 million euros, right? So there is basically a kind of a phased approach. It's usually you have to pay a fine, right? And the amount of the fine depends on the amount of taxes not paid. There is a sum rule, because it's also not, there is not a table published by the government, it's a sum rule. So, and it's basically based on a so-called daily rate. A daily rate is basically 1 day of your net income of the month. So if you are in employment and you get, let's say you get 2,400 euros as net income divided by 30, right? This is then, that's 80. So it's then basically, this is the daily rate. So up to 1,000 taxes not paid, it's 10 daily rates, and it raises up to, let's say, 360 daily rates for 50,000 euros.
Oh, that's a year of income. Oops. So just to make sure everyone understands the magnitude of what we're talking about here. If you evade taxes and Finanzamt catches you, which we'll come to in a moment, they can press criminal charges and you can pay up to 1 year worth of income as a penalty. That means you have to pay the taxes you evaded, of course, plus interest rate, plus the penalty if you evaded up to 50,000 euro in taxes. If you evade more than 50,000 in taxes, it could be a lot worse. Let me use this opportunity while I have it and use someone else as a messenger for bad news here on this channel. Here's Dirk.
If you are not paying more than 1 million, what I hope is not be the case, then there's imprisonment. In any case.
Dirk is laughing in the interview, but it's actually not funny for the people in the situation, which I know is a lot of you guys watching right now. So, Yuri Nater is asking the question, what to do now? If you made an income outside of Germany, should you hide it under the rock and hope Finanzamt doesn't catch you, or man up and be honest about it?
Tax evasion is basically from the first euro taxes not paid. But the point is that you can avoid the accusation for tax evasion and can avoid criminal proceedings and a court sentence with a self-declaration, right? And the self-declaration basically means that you have by yourself to basically declare the taxes not paid to the tax authorities.
Okay, we're good now. No penalties and no prison for us, right? Not so fast.
It only works if the tax authorities did not approach you yet. So if the tax authorities have already notified you of an audit, tax audit, self-declaration is not possible anymore, then we come into the criminal fines. And if the tax authorities already know about it, and you might know that they know about it, and that is the tricky part, because I had some cases where the authorities you filed a tax return, the authorities said, I have information about some dividend and interest income which is not declared. Please explain. They usually do it for this 1 year you just have filed. Let's assume 22. But you are already 5 years in Germany and you did not declare it for the other years, right? The experience I made so far is if you then act fast and before or together with answering the tax authorities, they usually give you 4 weeks to answer, right? You file for the previous years as well. Then they usually accept it. Important is that you declare all income. So even if, let's say, the question from the tax office is only about dividend and interest, but let's say you have a rental property in your home country, which you did not declare in Germany, then that has to be disclosed as well. Only if you declare everything and your complete income for that year is that self-disclosure is valid. If you miss something, it's invalid, and still they can start the criminal proceedings. Of course, the first approach is to do the tax return correct.
That's exactly what we've been telling you for years on this channel. File your taxes every single year because it will be worth it for 9 out of 10 of you guys watching. And of course, you have to declare them correctly. Now, I know some of you don't want to listen and you think you're smarter than anyone else, which usually works out until it doesn't anymore and Finanzamt knocks on your door. So we got a really good question on Instagram. How does Finanzamt know about your international investments in the first place?
There are several reasons. One reason is, and that's more for private nature, an offended partner. And that is basically the most common reason. So an offended partner, that might be a business partner or husband, former husband, wife, ex-wife, who know about it and they just file a complaint or report it to the tax office.
But wait, there's more.
The other reasons are the information exchange between the tax authorities. You might have heard about the Common Reporting Standards, CRS, That's basically part of the OECD standards. And you might heard about FATCA. That is US, Germany.
Yeah.
The treaty about information exchange. At the CRS, 119 countries have signed up for this. That includes all EU countries, but also India, Japan, Australia, Switzerland. So basically the main countries, they have signed it up. That means they are obliged to exchange information about bank deposits and so on. Basically, all of the tax treaties Germany has concluded with other countries, there is a clause included for information exchange, right? And I had a lot of cases where I was approached from the German tax authority. They told me, for example, I got an information from Japan that the individual has a rented property in Japan. Is that included in the German tax return?
Now, let me bring you some good news, at least for once in this video. If you make any income outside of Germany, it is not necessarily taxed. There's two options. Either your income is taxed at whatever tax rate, depending on what type of income it is, or it is not taxed, but still accounted for progression purposes. So if you make 80k in Germany and 20k outside of Germany, your 20k is tax-free, but your taxed here in Germany is if you made 100k. Dirk explains this a lot more detailed because he's an expert. The full video is available for channel members. Most of you watching will make either investment income, ETFs, mutual funds, whatever, or income from real estate. Let's talk about the two with the question we got from A. Nelsex. Hey, keeping your identity safe is very important to us. A. Nelsex asked on Instagram about investments. Investment income is taxed here in Germany with a 25% flat capital gains tax. But how are they taxed abroad?
The same as the German sourced ones. There is no difference.
Okay, that's very easy. And what if you pay taxes abroad already, like A. Nelsex? Are you fine then?
No, it's not fine. It has to be cleared in Germany because you are taxable with your worldwide income in Germany.
And that is exactly why we tell you guys in meetings to stop sending money abroad all the time, because for most, it's not worth it. You have the currency exchange rate, which might go against you. Inflation in your home country may be higher than in euros. You may be taxed twice, depending on the exact tax treaty. For most, it's not worth it. Now, what about real estate? That's what Connie Lingus was asking. Rental income is taxed here in Germany with up to 42%, whatever your personal tax rate is. But you get a lot of tax benefits as well, which will almost always lead to a taxable loss, which is what you want and which is what makes real estate so much sweeter. You make a real world profit, but a taxable loss, which gives you tax benefits. And how is rental income from Poland or any other country taxed? And what if you're taxed already in the country that the property is in?
And that depends on the country where it is located. So let's put it this way. If it's in a country with which Germany has no double tax treaty, it's taxable in Germany since worldwide income is taxable in Germany. If there is a foreign tax on it, that will be credited. If it is located in a country with which Germany has a double tax treaty, you have to look into the treaty, how it has to be treated for tax purposes. Usually, it is taxable where the property is located, so which means in the other country. However, in a lot of cases, it has to be declared in Germany still, because the profit of it will determine the German tax rate. So that's a progression clause. So the message is you have to look into the treaty, how it has to be treated within the German tax return.
Yeah. Or you get a tax advisor that does the work for you, because I think from all the things that we talked about, this seems the most easiest to make a mistake, the most complicated to understand, and probably the easiest to make a mistake. And before we come to the last question, clarifying if you can sell a property also completely tax-free if it's outside of Germany, because that will be possible in Germany after holding it for 10 years. If Dirk can help you out with sorting out your tax stuff, so you don't have to pay thousands of euros in penalties or go to prison, you can book a meeting with him on perfitex.de. So, what about the sale of a property outside of Germany? Is that tax-free or not?
It's basically the same approach as for the rental income.
Okay.
It goes according to the German rules, and then either it has to be, so if it's more than 10 years, nothing happens. If the holding period is less than 10 years, then it has to be included for progression purposes usually.
At least we conclude the video with some positive news, eh? Hopefully this video helped you out in improving your financial future and avoiding penalties or years in prison. Check out the full video if you would like more details, and I'll see you guys in the next video.